So I've said it before and I will say it again, mutual funds are not a good investment. Here are a number of reasons why. So typically mutual funds buy and hold, which is a long-term investment approach. An investment advisor, he'll back his claim that these are a good investment. He'll show you charts of the last 30 to 40 years, which show a nice solid uptrend. But the reality of the situation is that people do not hold for 30 or 40 years anymore. Also, the markets are fundamentally way different than they were over that time period. In the last 10 years, things have changed significantly. More recently, the last 5 years. So at one point, stocks moved by the dollar, and then they moved in, I believe, 12.5 cent increments and eighths. And then nowadays we got penny moves, fractions of pennies. So the marketplace, fundamentally different, 100%. So even taking a look at the last 10 years, good investment? No. None of the indexes are up, at least in the American markets. So, and the reality now is that people hold for like 4 to 6 years on average. And these are just not the way to go. So, when somebody's telling you mutual fund, mutual fund, mutual fund, think about how you're going to invest. Think about you're going to have to pay for your kids' college. Things come up in your life. You're going to take money out of that. You're not going to keep your money in that fund. There's going to be a bigger and better opportunity presented to you, and you're going to move money. You're going to get hit with fees. These fees kill you overall. So, another thing about mutual funds, they hold huge positions in the stocks they hold. They hold millions of shares of every stock that's in that portfolio. So to accumulate millions and millions of shares of stock, they have to buy these over a long period of time. Well, an individual investor is way more nimble in what he can do. If you're buying 100 or 1,000 share lots at a time, you can get in and out much quicker than a mutual fund can, giving you a better price and ultimately giving you more opportunities to make money. Mutual funds sit on stocks for a long time, and they don't give you the advantage of the short-term fluctuations in the market that an individual investor has if he's managing his own portfolio. Mutual funds also lack transparency in what they hold. So last time you looked at your statement and you wondered what your fund was made up of, you don't know. It only says what you're doing. If you ask your broker, he might be able to tell you a couple of the holdings, a couple of the blue chip stocks that every one of these funds has a little bit of, just in case it goes through the roof. They don't want to be left behind and have the general public question why they weren't holding Google or another stock that goes way high. And lastly, they're pushed on the public and are marketed very heavily. So to market these things heavily, there's fees. You pay fees. You pay the fund manager fees. You pay broker fees. And ultimately these fees destroy you. They make it hard to make money. So, do you think the institutions make their money in mutual funds? No, they don't. Their salespeople make money in mutual funds because they push money in and they compensate them that way. They make their money trading. They make their money through high frequency trading and essentially through knowing what you are going to do with your money. So, mutual funds a good investment? No.